Global markets are on a free fall. Trillions have been erased from stock values. The US-China trade war has reached fever pitch, leaving investors scrambling and economies on the edge. The US markets have today opened in the red. The tariff bomb wipes out $10 trillion in stock market value. For comparison's sake, that's half of the EU's entire GDP. After Monday's mayhem, the Asian and European markets are marginally on the green. But what happens next is more worrisome. Markets continue to remain under a cloud of uncertainty as China asserts it will never accept the blackmail nature of the US to Trump's threat to ratchet up tariffs on imports from China to more than 100%. Beijing has vowed to fight till the end.
This is a typical example of unilateralism, protectionism, and economic bullying, and has been widely opposed by the international community. China strongly condemns and firmly opposes such actions.
President Trump's threat to impose an additional 50% tariff on Chinese goods could push cumulative tariffs to a staggering 104%. Beijing is praising for an economic war of attrition. It's feeling boxed into a corner by the US's intensifying tariff assault on China and any country that buys or assembles Chinese goods.
With China, as you know, against my statement, they put a 34% tariff on above what their ridiculous tariffs were already. And I said, if that tariff isn't removed by tomorrow at 12 o'clock, we're putting a 50% tariff on above the tariffs that we put on.
In 2024, US recorded its largest deficit with China, standing at almost $300 billion. In 2025, the US already faces a $122.7 billion trade deficit, a 6.1% increase from the previous year. The US imported over $400 billion in goods from China, while exports to China totaled around $278.5 billion. This growing gap has fueled tensions as Trump asserts that China's trade surplus is funding its military, something he is determined to curb. But there are worries that the clash between the world's two biggest economic powerhouses can cause more pain.
I've been affected. Yesterday, I lost 50,000 yuan all of a sudden. My capital shrunk by 50,000 yuan because my funds were not strong enough. Losing 50,000 yuan like this, it's very depressing.
Now, in a surprising twist to the tariff saga, China is considering banning American movies as part of its retaliation strategy, a move that could cost Hollywood billions. This cultural dimension highlighted the multifaceted nature of the conflict, which extends beyond tariffs to influence global culture and trade dynamics. We earlier spoke to Simon Lee, who is a professor at the Chinese University of Hong Kong, and this is what Simon Lee told us.
China's side target at 5% GDP growth, and now the nation is facing rising unemployment issue. So this will have negative impact on the national employment status and economic growth. On the other hand, for the United States, suppose there should be several rounds of interest reduction, but now with the additional tariffs all around, then inflation will go up again, and this will eliminate the chance of having interest rate reduction. This will have a serious blow to the US stock market and the global stock market as well. The chance of having recession is increasing, but for the time being, I don't think it will lead to serious recession because President Trump is inviting other nations to negotiate with the United States. So I think sooner or later, China will start its negotiation talks, maybe several rounds, just such as what we see in the Trump 1.0.
For all the latest news, download the WION app and subscribe to our YouTube channel.